Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and put together a plan for the week ahead, looking at some high probability action areas and price objectives that we can realistically expect to achieve this week. Before jumping into the update, from a housekeeping perspective, I'm going to be offline from Wednesday, the 18th of December. I'll be basically signing off after the FOMC meeting, and I will be resuming commentary and updates and analysis, etc., from Monday, January the 6th. So, looking firstly at the macro side of things, obviously the main event this week is really going to be the Fed meeting on Wednesday, where we will obviously get the interest rate update with markets pretty much pricing a lock on a 25 basis point cut. Really, the one area of uncertainty and something that could bring some volatility into play will be really the economic projections, as they might shift from the four projected cuts penciled in at September's meeting to potentially reduce those down to three cuts. And we have seen yields on the front foot in the US based on this. It's more likely at this stage, I think, that the Fed may stick to a more dovish projection of economic conditions based around four cuts, and so that's if they stick to the four cuts and have a more dovish tone in terms of the update. I think that will ultimately support markets and put a lid on yields stateside at least. So that's what we're looking at heading into the FOMC on Wednesday. And between now and then, we get retail sales tomorrow, and then on Friday, PCE index is released. So it's really going to be about Wednesday, and then I think we're going to start to participation and volumes taper off as we head in then to options expiration on Friday, and then the holiday trading period begins in earnest at the close on Friday. And like I say, realistically, in terms of volumes and participation coming back, it's going to be that Monday, the 6th of January, when things get back into full swing again. So, in terms of the technical picture, let's start with a quick update, taking a look at the seasonal patterns in play, and you can see here this is a 96 year look back, and looking at 25 election years in that sample. Excuse me. And we can see that December has a bullish tilt to it. We get a bit of volatility in the middle of the month, but ultimately then lead up to close out the year on a bullish note. So I'm expecting that seasonal pattern to play out. Just another tool here from SeasonAx's event analysis. We can see that the second day of the Fed meeting, looking at back over 25 years for the second day of the meeting around this time of year, that 2 days out before the meeting, we tend to move to the upside and then see a bit of post-meeting volatility, or post-meeting consolidation, sorry, would be a better frame of reference there. And then we can set a base then, specifically, I think, once we get past Friday and the contract roll into March will be fully complete. I think that sets the base then for a low volume grind higher into year end. Looking at the technical setup, last week was an inside week, but we remain perched above the 5-week volume weighted average price, which comes in now at 60.45. So that's a key area. As long as we remain supported above there on a closing basis, then momentum maintains its poise to the upside, and we are looking to target the 62.51, which is a 5 equals 1 minimum objective versus our potential wave 4 low posted in August of this year. So that's our ultimate, or my ultimate target anyway, as we head into the close of the year, and that's what I'm going to be looking to play for whilst during the vacation period. Looking at the daily chart, we have we've got a bullish structure in play at the moment, consolidating in a bull flag. I'll be looking for an upside extension through the the trend channel resistance to set the tone for higher prices as we head into the back end of this week. Noteworthy in terms of implied volatility, the options market pricing in 71 points of movement this week. So that gives an upside objective of 61.26 with a downside objective of 59.84 versus the Asian Open last night. So those are our targets on the upside and our support on the downside potentially in play. And those are going to be key areas for me to either look to book some profits here on the upside as we test into that 61.20s, or if we do get a pullback, some unexpected volatility around the Fed, certainly we can think about this 6,000 level leaning against that 59.84 as potential support for the next phase to the upside. At this stage, it's going to really take a close through that implied volatility support zone. So back through 59.80, which would suggest that we could trade back to retest the next volume area on the daily profile back into the 58.90s. But like I say, focus at this stage is to the upside. So looking at our weekly plan here and what I'm looking for into the week, using a bull bear zone, and I'm sorry, I should clarify, I'm using the front month continuous futures contract, which is actually still quoting December prices and will do until the contract expires on Friday. So just keep that in mind. You can adjust the levels for the March contract, which is the H contract, or the spot price accordingly by adding or subtracting the spread. So heading into the week, we're using a bull bear zone, the volume point of control at this 60.66 down to 60.55 area as our support. And then we are looking for an upside extension. Today, what I'd be targeting is a move up into daily projected range resistance 60.90, which coincides with the trend channel resistance. I'd certainly be thinking about intraday or end of day short opportunities there to play for at least a corrective pullback before looking to set a base again for this upside extension into our 61.20s target. Now, we do have an internal trend line resistance coming in at current levels, 60.75. We have been bid up since the market opened overnight. So the majority of the overnight inventory is on the long side. So we could see the potential for rebalancing as we start the week. And certainly any pullbacks into this 60.30, which is an equality objective versus the 61.02 swing high, I again will be looking there on the long side, watching for bullish reversal patterns to play for the upside and ultimately to break through the trend channel resistance to target our 61.20s. If we get up into the 61.20s, like I say, I'll be looking to book some profits there, and then pullbacks should find support back into the 6100 area for the next leg to the upside, which would be into the 161 extension of our last major corrective leg, which would then target a move up into the 6160s to 6170s. And from there, again, we can see a pullback, a correction, but ultimately we are looking to target 6250s on the upside as the principal upside objective for this move. And like I said, that's going to be my target as we head into the close of the year. At this stage, like I say, we would really need to see a break of the 59.80s to suggest a deeper corrective move where we can look initially back into the volume spike on the volume analysis here into that 5900, 5917, but the value area low for the profile as well. Let's keep that area in mind. If we do trade back into that zone again, I would anticipate that area act as support, and we attempt to base to build higher again. And 60/30s intraday today would be an area if we do get a pullback, a correction into today's session ahead of the FOMC with potential for a bit of position squaring. Then look to that 60/30 area as the first key area to look to add to long positions, looking for 6120s initially, and then on to the 6160s, 6170s. And so that's really where I'm at as we head into the week. As always, traders, plan the trade the plan, and most importantly, manage your risk. And I wish you all a happy holiday season and a prosperous new year.